Okay. How do I know this is recording? I push, right? It doesn't, it seems like it's recording. Quick, quick, quick. It's not blinking. Well, oh, it is blinking. Okay, go. All right, cool. All right. Ready? Good. Yeah, it's blinking. It's good. We're Skyping with Javier Goldin of the Goldin Group, talking end-of-year tax savings. Are there moves, Javier, that you can do? This is late in December. Are there still things that people can do to save themselves on taxes?
There are many moves that you can make towards tax planning, but let me just point out two that will be very useful to everybody who has one, a small business or a medium business, but that you own it, and two, that you have children or a spouse. So if you fulfill those two conditions, there are great tax savings at the very last minute that you can take advantage of.
Oh, I'm intrigued. Tell me them.
Good. Let's talk about children first. And this is all, of course, legitimate. If you have children, you can pay them up to $5,500. So a little bit more, but 55 is what I recommend. And it's a business expense to you on which you don't have to withhold any Social Security taxes, nor do they have to pay income taxes. What does this mean? That it's a straight off, and it's no income to them. If you have two children, $5,500 each, it's $11,000. So it's a great tax deduction at your end. Please take advantage. Treat them as employees. Two more things you should keep in mind. They should be doing essential work. Essential work means things that are not like cleaning, which is non-essential, but rather things such as filing or marketing on your behalf. And number two, they should be of working age, meaning more than 5, 6, 7 years old, so you can justify filing. So that's the first tax benefit you can derive immediately out of hiring your children. Second one, a bit more complex, but it works very well. If you have a 401k plan, then you can hire your spouse to do any type of work that you would like, and she can defer the amount of money that she's earning up to $16,500 under your own 401k. And it's both a deduction for the business, and it all goes towards your retirement. So in short, two great tax benefits that you can derive out of hiring family members, one for the children, up to $11,000 if you have two children, and for your spouse, up to $16,500.
Okay, I want to go back to that one about hiring the spouse. Okay, so you say that I can hire my spouse if I own this small or medium-sized business, and what happens with the money that she gets paid, or does she get paid?
All right, so let me just sort it out. So one condition, you have for okay plan. Okay.
Wait. Say, hold on. There was a little dropout. Start over again. What are the conditions here?
Okay, a couple of conditions that we got to keep in mind for the second tax savings to take place, which is hiring your spouse. One, she must have, or the company must have, a 401k plan, a retirement 401k plan. Okay? If you have that in place already, if you don't, it's too late, but if you have it in place already, then you can hire your spouse, pay her for maximum tax advantage $16,500. This becomes a company expense, and your wife can choose to put all the money into a retirement account of her own choosing, and she pays no income taxes on this. So again, this is a technique through which the company saves money because it is a business expense, and the person who receives the money does not have to pay income taxes on this.
All right, and I hate to make you go through this again one more time, but let's start over. But just we talk about hiring your spouse, because there are women out there who own businesses as well, and I don't want to be sexist about this. You know, they have, so they can also hire their husbands. So is that
totally right?
All right, so let's. You say there's you say there's another step that small and medium-sized businesses can do. It has to do with hiring the spouse. Take me through that.
All right. So a couple of conditions to take advantage of this tax-saving technique. One, you must have in place a 401k retirement plan. Okay? If you have this, and your wife, of course, does not participate at her work in the 401k,
Or husband.
Then you can hire her and pay her up to $16,500, which is the amount that your spouse can fully defer. What does this mean? That your business, as a small business, can take an expense of the amount of the salary that you pay your spouse, that is $16,500, and your spouse can defer the full amount of income that she received, which means that she does not pay income taxes. So it's a win-win. For your business, it's an expense. For your spouse, she doesn't pay income taxes. And for you guys as a family, all the amount goes to a retirement account.
What about, let's move on. It's medical expenses this time of year. Is there something we can be doing in tax savings in terms of medical expenses?
Unfortunately, the kind of planning that goes into medical expenses is far more involved, and it has to do with the type of plan that you have in your business, or if you don't, and you just deduct the expenses at the individual level, then how you organize those things. So I would concentrate now on those things that, 2 weeks prior to year end, we have to get into place, and that is the hiring of the family members.
Okay. What about retirement savings? People always, it's the end of the year. Oh, they forget to pay themselves first. Still time to get some money into 401ks, IRAs.
It's a good question, and it all depends on the type of retirement vehicle that you have. If you have a 401k plan, then the individual can apply his or her earnings to this 401k up until December 31st. The employer, on the other hand, can make contributions on behalf of the employees up until April 15th. So, in terms of putting money into your retirement, if you are the employee, you have until December 31st. If you are the employer, you have a little bit more time. It's always a good idea to max out, to the extent that you can, of course, your retirement savings, because that money is yours, and then it grows tax-free for the rest until you can take it out, 65 or 62.
It's been a pretty good year on the stock market. What about capital gains? What am I supposed to do about them?
The question as to whether or not you should sell the stock depends on your personal tax situation. So it's very difficult to just give you a blank statement. I can give you a very general rule, however, and that is that if you have losses in other parts of your financial life, then it may be a good idea to cash in the gains that you have pursuant to your stocks, and then one can offset each other. Not to the full amount, but to some degree.
All right, so that's a broad statement, and there's plenty of other ideas that you have. Where can people get in touch with you, Javier, if they have questions this time of year, which they probably should?
The best thing is to visit us, please, at goldengroup.biz. There is plenty of information there, phone numbers, and call us, email us, and we'll be sure to be attentive to you, as this is the best time to save some real money.
You want to give the phone number?
It's 301-913-0008.
All right, that's Javier Goldin. You get him at the Goldin Group in Bethesda, goldengroup.biz. Thanks, Javier.
Thank you so much for having me, Mark.
Let me stop the recorder.